In the fourth quarter of 2023, ROST didn't merely meet sales and earnings expectations, they surpassed them. The earnings per share climbed from $1.31 to an impressive $1.82, while net income saw a substantial increase from $447 million to an outstanding $610 million. Furthermore, the quarter's sales reached a hefty $6 billion, a feat achieved through a 7% gain in comparable store sales. If that doesn't astound you, consider this. For the fiscal year of 2023, the earnings per share rose from $4.38 to $5.56. The net income for the year was $1.9 billion, a considerable increase from the previous year's $1.5 billion. Total sales also saw a remarkable surge, from $18.7 billion the previous year to $20.4 billion. The operating margin for the fourth quarter also experienced substantial growth, rising by 165 basis points to 12.4%. This was primarily due to robust same-store sales and lower freight costs. As we delve into the holiday season, the top-performing merchandise sectors were cosmetics, home, and children's products. The sales results were broad-based across all geographical areas. However, the performance of DD's discount sales slightly lagged behind Ross's growth. Despite some disappointment with DD's performance in newer markets, ROST is conducting a comprehensive analysis to understand and address diverse customer needs. They plan to moderate DD's store growth in these markets, instead focusing on existing regions for new store openings. In 2023, ROST added 94 net new stores, ending the year with a total of 2,109 stores, which included 1,764 ROST Dress for Less and 345 DD's Discounts locations. In terms of financial initiatives, ROST repurchased 1.9 million shares in the fourth quarter and 8.2 million shares for the fiscal year, totaling $247 million and $950 million respectively. The company also approved a new 2-year, $2.1 billion stock repurchase authorization and a 10% increase in the quarterly cash dividend. As we look ahead to 2024, ROST is planning for comparable store sales to increase 2-3%. With earnings per share expected to be in the range of $5.64 to $5.89. The company also plans to open approximately 90 new locations. In the first quarter, ROST expects comparable store sales to increase 2 to 3%, with earnings per share forecasted to be between $1.29 and $1.35. Total sales are planned to be up 6 to 8% compared to the previous year's first quarter. So, as you can see, ROST's success isn't accidental. It's the result of careful planning, strategic decision-making, and relentless execution. And with its plans for the future, it seems ROST isn't slowing down anytime soon.
Arieous Invest. Trading reimagined.